Welcome back, ladies and gentlemen, to our third episode. Today we'll be talking about moving average. So first of all, let's bring out the moving average. You can change the setting over here. The first one usually is 20, the second one is 50, the third one is 100. We change it to 200. Okay, how do we use this moving average to look for opportunity in the market? Okay, first of all, we look at the 200 days first. 200 days, we will use it to check the trend. If the trend is in an uptrend, then the price will be above the 200 days MA. And if it's below, then it signifies a downtrend, a bearish market, a bearish trend at the moment. So our buy signal will comes in when the 20 days cross 50 days. For example, here, 20 days cross 50 days. Yes, this is still below our trend. It's still in a bearish signal because it's below 200. When it crosses over, that's when it goes up. Okay, let's look for another opportunity. Another example in this case, crossover and it goes up. Red cross blue. But do watch out for the green line, which is the 200 days MA. You always want to trade in an uptrend. In this case, this is not a good example, but an example for a bullish crossover. Let's look here. Back then, way before, in 2015 and 2016, these are the opportunity that you can see from the moving average crossover. When it crossover, you buy and you enter. Always remember our first episode and second episode, which is trend and stochastic. Use that to your advantage to look for a better opportunity in buying stocks. Okay, first thing first, trend. Second thing, stochastics. Then third, moving average, or moving average then stochastics. Both of these indicators gives you opportunity in a different way, but the main point is when the line has a crossover. When there's a crossover happen, that's where your buying signal comes in. And when it cross downward, then it will signify a bearish signal. It continue to rise. As you can see, it's uptrend, continue to rise. This is where you need to be careful. The first crossover, yeah, you think, okay, it might come out, it might come back, but hey, no, it didn't. It come back. Moving average serve as a resistance in this case. It blocks the price. 20 days is still below. Then the next crossover happened over the 200 MA. It continue and continue to rally downwards. So do watch out for this kind of incident, this kind of situation. Okay, remember to cut loss. So next, what else can we discuss? Okay, combining this trend and stochastics and also moving average. Let's look for the latest these few years since 2020, after our COVID has started. Here, we look at the crossover of a moving average first, here, and a trend. Is this turning into an uptrend? As you can see, it is starting to become an uptrend after the drops. Okay, then seek for another opportunity here using stochastics. Oversold, we want to buy cheap, right? So oversold area, here, you can actually enter here. Your first opportunity last year will be over here. First crossover, still below green, the 200 days MA. Still a bad sign. Be careful. So if you didn't enter here, doesn't matter. Wait for it to break above this 200 MA. Let's look into here. Breakthrough. Is this another opportunity for you? Uptrend, buy at the dip. Stochastic shows. Okay, that's when you can go in. 20 days above MA, 50 MA above, and a crossover again. If let's say if you save your first bullet here, your second bullet here, crossover, 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 okay, you buy here. Second time, this will be the first, this will be the second. When it continues to rise, crossover, crossover, third time, fourth time, fifth, sixth, seven, cross down, take profit, ciao, don't wait. If you want to wait, your choice. Fifth, sixth, seven, eight. Average out, okay, the first one is 40%, you cut down, cut down, cut down. The rest is like 10, 15, around 15%. So 1, 2, 3, 4, 5, 6, 7. Just within COVID season, year 2020, 7 trade in one counter make you more than 100%, I believe, in this case. But of course, each trades carry different amount of money, and it could vary at the end. So when it crossover coming down overbought area, okay, you can take profit or you can continue to buy because it's a crossover, and then watch out here. Okay, this is the crossover. When it drops below 50, it tested 50 as a support and it breaks, it come down, then you better be careful. And then the next signal for you is when it crossover. This is a bearish sign. Okay, you should cut loss in this case. After that, when it comes back, crossover, hey, opportunity, buy at the dip. Okay, buy at the dip over sold area. So combining trend, combining this moving average and also stochastics in your trading, isn't this helpful in helping you to make a lot of trade and telling you when to go in, when to get out? Then this is actually a secret that I want to share with you today. Combining all these three is actually our CNX up strategy that we have incorporated into our ESP master to screen the whole market day and night for you and look for opportunity for you to trade. There are many opportunities throughout the year, so just pick 1, 2 or 3 and make the max out of the stock itself. Is it hard? I would say yes, because you're not familiar with it yet, but don't worry, you'll get used to it when you look at the chart and when you look at the results later on. It will really help you to and convince you whether this strategy works for you or not. So that's all for today, and I hope you enjoy this episode on moving average and this little secret that I tell you on this third episode, which is our CNX up strategy. So goodbye and enjoy your trading.